patient with us. Obviously, a little bit of a technical glitch. Very excited to have the IP track behind us, and now we're looking forward to the legal track. We've got a really great series of 3 sessions coming up, all hosted and sponsored by Ryan Wellington at Carpenter Wellington, and I'm going to bring them up now. So thank you all very much, and please don't forget to join the networking and the happy hour at Olive and June at 5 o'clock today. Thanks.
Hey, good morning, everyone. Oh, afternoon, rather. Excuse me. So welcome. Thank you for attending. So today I'm joined by Derek Ruth, Leif Magnuson, and Alvaro Jimenez. And what we're going to be discussing is the kind of legal pitfalls, but really what that is kind of hindsight and tips and just experiences. So what I thought, guys, welcome. What I thought we would do is kind of take a brief moment to introduce yourselves and your companies and kind of set the stage of what we're going to be discussing. Derek, why don't you go ahead?
Great, thanks for the intro. Derek Ruth from Hivet. We're a communication platform for construction and the deskless industrial trades. We're seed stage, venture backed by Stanley Ventures, which is the venture arm of our CVC venture arm of Stanley Black & Decker. We've been up for about a year and a half. Just got to market in the last couple of months. Quick and easy.
Alvaro.
Hi everyone, Alvaro Jimenez, co-founder at Unity and founder at Gaudium Capital. Background mostly in institutional private equity, tech, and venture capital. And my focus primarily now is investing in exponential technologies within the particular areas of artificial intelligence, cybersecurity, blockchain, AR, VR. And we're also about to launch a decentralized finance hedge fund that will be one of the first fully regulated institutional hedge funds in the US.
Cool. And Leif.
Yeah, hey, I'm Leif, CEO and co-founder of Tip House. Founded about 3 years ago. We're raising our seed round right now. We do tip distributions for restaurants calculations, and we're rolling out a earned tip access program so that employees can get their tips on a card instantly, kind of thing.
Excellent. Well, thank you again, guys. So what I thought would be helpful was kind of going through the arc of the startup and your experiences, right? Because like I said, we're talking kind of in framework of legal pitfalls, but really what we want to do is kind of discuss your experiences, what worked for you, perhaps what didn't. And Alvaro, you've got a unique experience because you've both started at least a couple of companies, but you're also doing diligence on other potential portfolios. So you've got it from both sides. So excited to hear your experience. But Leif, why don't we tell us where did the plan first start for Tip House, and what was that kind of, excuse the pun, tipping point?
Nice.
Yeah, you feel that, didn't you? To kind of making that plunge and getting started.
Getting started. Wow. So I felt very fortunate to have met you. I think I was going to, what was it, TechCrunch or something like that, or it was one of those tech events we had in Seattle. You guys had a booth. Met you at that time. I was subscribing to a legal firm. Kind of jumping into this, not knowing what I was doing. Subscribed to this legal firm. I didn't have like a point of contact that was like my own. They were trying to have more of a subscription model for their legal firm, and it was not good. So met you. We kind of formulated, hey, look, let's create a proper DLC. Let's have a foreign entity in your state of residence, and things have been going well since then. Have had some hiccups. I don't know if we really want to get into that, but
yeah, we're getting some structure early.
Structure early, yeah.
Sure.
Kind of at least, oftentimes in a startup, you don't have the capital kind of like lay everything out. But having somebody in your court that can at least have an outline, so you know what to expect at what juncture down the road is super helpful.
It's easy to have just a plan, but to execute it is tricky, and pulling in the right partners early.
Yeah.
Alvaro, from your standpoint, both from starting your own company, but probably more importantly, from what you see from other founders, how often do you see that the founders have an idea but not necessarily execute according to plan? Is that a high number, or what's your experience there?
Well, I would say that it never goes according to plan for anyone, including ourselves.
That's true.
But touching very quickly on the prior point that you guys made, I think that having the right law firm right by your side is essential. A lot of startups are killed just for the mere fact of going to the wrong law firm, paying huge legal bills, and getting 1,000 reasons why they cannot do what they want to do, right? And it makes the whole world of a difference to go to the right legal firm that tells you, that's an interesting challenge. We're going to figure out how to do it, right? Yeah. It's like night and day. So, that's certainly very important. Now, from the execution standpoint, I think it's mostly, a combination of luck, IQ, and EQ. And what I mean by that is, for instance, when I started my very first significant size company, I made a lot of mistakes. And I graduated grad school with $500 on my bank account. So I basically put like everything that I had accrued during my professional career into my first big significant startup. And so I had no safety net, right? It was all in basically. And I made a lot of mistakes at the very beginning. On the very first startup that I invested in, I took 3 positions: one as a lender, one as an investor, and one as a service provider. And that startup, ended up being taken out of the market by a competitor, right? So, the lesson was learned like in a hard way, right? But then at that point, you have 2 choices. You either persevere and try to find a way through, or you just, decide to go back to corporate and, just have your safety net back, right? My particular case, what I did is I spent a couple of days like pretty bad, but then I decided to take a loan that would give me 3 extra months of runway. And in those 3 extra months, we landed a pretty big deal that slowly but surely put us back on the black. And then since then, right? So from a point of almost having to shut down and go back to corporate, today we have more than 6 Unity family companies. We have invested in more than 12 different companies. We're about to launch a hedge fund. And then, Gaudium Capital is also doing their own cool deals. So, things have evolved pretty well. But there was that inflection point, which was make it or break it. Mm-hmm. And what truly makes the difference at that point is pretty much just your emotional coefficient, really.
Right. Yeah. Having the mental fortitude to push forward. What about you, Derek? You had an idea that's probably fair to say a deviation from what you were doing in a way. How did that plan, in a sense, come to fruition for you?
Well, I certainly agree with Alvaro that there's no plan ever comes to perfect fruition. For me, as far as the legal perspective, I think, obviously having good counsel early, especially if it's your first go, is always really important. The biggest mantra that I have in starting them, I think I've started about 5 or 6 different entities of various ranges of success. The biggest mantra I always have is you have to plan for success, because failure is easy. Everyone wraps up and goes home, but success, especially if there's multiple entities within an organization, making sure you have the right levels of control and you have the right legal entity to make sure you're managing that success, and making sure you're managing.
Can you give an example of what managing success would would be like? What do you mean by that?
So there's always the time in, success is always variable, right? Success is relative, depending, to the point that you start with $500 and all of a sudden you have $5,000 in your bank account.
Yeah.
If you have two friends that have started an entity and the two of you were perfectly in lockstep when you had no money and no way to really make a decision, the moment you have a little bit of money, all of a sudden everyone's got their strong opinions. And if you haven't developed an idea of how you're going to manage those situations and then have the legal structure around it, if it falls to that, it can be a pretty big issue, and it's killed many companies from just not being able to manage those issues. So being able to make sure you have sort of ways to manage that, it becomes even more amplified when you have other investors, because now other investors want to come in and they have their own ideas. And if you haven't managed that control well from a legal perspective, you never get out of the gates.
Yeah, and is that something that you forecast or plan, or is, in your opinion or experience, is that something that's fairly fluid depending on the arc of the success of the?
I mean, you need to be set up right. Obviously, making sure your articles are set up right, and to Leif's point, like that you have the proper corporate structure is set up correctly, is drawing the idea of drawing something on the back of a napkin is great from a product perspective, but ultimately you're more than building a product, you're building a business. In order to be investable and have long-term life, you need to make sure you're treating the business just as important as your product. That makes sense. Because that's ultimately your product is the business.
Right. Yeah, a lot of people forget that as well. They focus on the product. So that's
your product will change a dozen times.
You can. Yeah. That's a good segue, because you've all mentioned like legal partners, but partners in general early. And by extension of that, there are kind of co-founders or those that are coming in early who have to share your vision, right? Leif, for example, I know for a fact that you've brought in some strategic employees or partners to kind of help bolster Tip House.
Yeah.
In your experience, kind of when was the key time for you to make that decision, and what were the roles? And obviously coming in early with limited capital, right? They want equity. So kind of what was your thought process around what the makeup of that would look like and who you were looking for?
So I think I approached it differently than some of my colleagues that are running companies did. Our first hire outside of the founders was a friend of mine that excelled at marketing and getting that online presence. Ours is a digital product. We're selling to restaurants, but at the end of the day, it's hosted in the cloud, and so I gave, the agreement was, hey, come here, instead of making $200,000 a year, come over here. I'll give you a significant chunk of equity that you can earn over 3 or 4 years, based off of revenue milestones that we achieve as a company together, to make sure that we're all kind of aligned. I think that I definitely gave up more equity than most would.
Were you aware of that at the time?
I was, yeah. The thinking was that, hey, look, let's create a foundation of like 5 people that I'm not saying I gave him like 20, but it was less than 10, but it was enough that he's gonna be a ride or die, and creating that core of core unit of people. And he's recently moved over to the COO role, managing operations as we're hiring people and kind of taking care of that. And he's the best hire I could have ever brought in.
Yeah. What about you, Derek? You've slowly been kind of building up resources, right? What were your thoughts behind the strategic hires, I guess you could say?
You always need to be smart with your equity, but 100% of zero is still zero. So people is what makes ideas go, and we can never do these things ourselves. At least that's the tack that I've always taken. So you want to make sure you're hiring smart, you're hiring for need, and you don't hire too early. But ultimately, if you find someone that you feel is going to get you to that next level, or that raise, or that next milestone, there's really nothing that should stop you from giving giving them what they need to make sure that they can continue to make you successful. There's been a lot of times in the past when I can look back and say, if we would have brought on this person or that person, maybe we would have gotten to that next level. And there's you gotta go for what you're trying to go for and make sure you're not overthinking that equity exchange if needed.
Yeah, Alvaro, in your experience, both probably more on kind of looking at portfolio companies. What have you seen in terms of potential portfolio companies that have worked, and conversely, what have you seen that may have caused concern or pause on your end in terms of either co-founders or those that have been brought in that perhaps are not a good fit long term?
Yeah, I guess the most important part is really motivation, right? They say that hustle beats talent when talent doesn't hustle, right? And I think that's very true. But I think it's also, you need to have a good set of different skills within the team, right? If all of the founders, for instance, are technical, then you encounter typical problems such as they focus on creating the best technical thing in the world, but they never get to see the market, right? Or they don't get enough customer feedback, or they don't get enough sales, because there's no focus on that, right? Like they just purely focus on creating the best next technical thing. And that's pretty much, a common pitfall that we constantly see, right? That they get blindsided, and then by the time that they realize they have run out of money, and they have a very cool technical solution, but they have no market traction. They have very few customers or none, right? They don't have a team to expand sales or markets or anything else, right? And they just slowly die. So I think it's very important to, like Derek and Leif have mentioned before, to focus on all of the different areas, because it's running a business, right? And there are a lot of things that, look, none of us find particular pleasure in doing, right? Such as accounting and HR and things like that. Like we all like to, go and get the business done and grow our company. But those are essential things too, right? I mean, if you leave them, sidetracked, then it's not going to go well.
And that kind of goes to what you were saying, Leif, like focusing on more kind of the operations, the marketing and outreach is really kind of, by extension, focusing on the business side and kind of broadcasting it in a way rather than focus solely on product development.
Yep, absolutely.
Yeah, that's interesting. So in terms of scaling on a bootstrapping type of budget, how did you each kind of approach that? And there is this kind of overlooming kind of like COVID era as well, right? They had to kind of navigate. So this is particularly like interesting times. How did you each do that? Scale appropriately, either pre-revenue or marginals, perhaps. Making sure that the product development also, as Alvaro was saying, and Derek as well, you're also kind of keeping pace with the business development. Derek, why don't you start?
So, I mean, once your product is ready to go to market, you obviously need users to tell you whether or not you're onto something. I mean, I've always taken a user-centric approach with product development. So getting users involved as early as possible. It's never helpful to build in a vacuum. The smartest person in a room dynamic never really works well for good product development. So a product should be developed with a user and a user set in mind. But when you're bootstrapping, obviously you're doing your beg, borrow, steal to get users to get in there and give you feedback and start to use them. But obviously you need to make sure that, and this goes back to the people in the room with you, making sure you have someone concentrating on the product, someone concentrating on getting that product to market, but never losing sight of the fact that you have a business to run and you have, your local laws and licenses you need to manage and your taxes to do, and you need to make sure that that doesn't kill your business along with the rest. So making sure you have people that have clear defined roles, understanding what you need to do in order to get through those steps.
Yeah. What are your experiences, Leif?
Well, we sell to restaurants and our software distributes tips. So during COVID, we didn't grow at all for about a solid year, which was tough. but we utilized that time. We could just kind of, buttoned up the hatches and was like, okay, well, let's figure out what will work when things go back to normal, because they have to go back to normal eventually. I mean, there was always the thought that maybe it won't, but things started picking back up in February. One of the things that we spent a lot of time on is like, how do we get in front of customers for super cheap? I don't, we don't have $100,000 to throw it into a marketing budget. We already had, in-house, we were doing our own SEO, and we're top ranked across the board on just about every search term, which is great. Doesn't quite pay the bill. So we were able to create a really good email marketing campaign, pulling lead lists and getting contact information. It's a whole process, but that has been super successful for us and has kind of driven our growth without paying hardly anything for it for a long time now.
That's interesting. Was it tough to pivot like that, or was it just kind of a natural progression?
It was just kind of a natural thing. I mean, we just kind of strategized, found a good process, implemented that, and that kind of adjusted our inbounds to a large degree, which was nice to see. And then we were lacking on the sales side, and we had to bring in people on that front. But and Alvaro, in terms of your portfolio companies, how do you guys assist in terms of those early stage and helping scale them and grow them appropriately? What have you seen that works? Conversely, what have you seen that perhaps is a challenge?
Yeah, so I think it's and this, again, I learned this the hard way as well with the first companies that I invested in. But it is very important for a startup as well as for an investor, I think, to get very quickly to revenue as soon as you can. That will give you peace of mind. That will also help you, increase your runway, and it will show traction. So it's truly like one of the best milestones that you can get to, right? Now, how do we help our startups? I mean, we help them in a variety of different ways, but I think the most important is helping get that business dev, right? Introducing them to potential big accounts, coaching them on leadership, also helping them when it comes to additional rounds of financing, right? And more than that, I think what often makes a huge difference is to put the right advisors helping them. For instance, if we have a media startup, which it's not our forte, but we have a couple, putting someone like Eric Doctorow to help them, who is the former president of Paramount Pictures, it goes a very long way, right? In opening doors, in giving them advice, in telling them what he believes is the secret sauce of the business, and so on and so forth. So one thing that I would encourage every single startup is get the best advisors that you can, and not depend on them, but rely on them for when you need it, because they can open doors that can change the game pretty quickly.
That's great advice. Yeah, that's great advice. And so, Leif, you've got a couple of advisors that you brought on over time. What was kind of the underpinning of you identifying that need? Was it purely by
just not knowing what we're doing? I mean, it especially during fundraising. This is my first time, so having to learn in a short period of time without wasting a bunch of time and a bunch of resources, because we still have a business to run, is difficult. So having somebody that's done it many times, that's the one we just brought on a month or two ago, is currently the CEO of a 500 employee company, and he just really knows his stuff, and he's just helps guide us through these big decisions. Obviously there's the introductions that are nice too, but super helpful.
Yeah, I mean, that's a really good point. I think underpinning that is that as a CEO, founder, whomever, you don't always have all the answers.
No.
Right?
Yeah, I think the important part is just realizing that, though. A lot of people have too much ego, and they're like, oh, I got to figure everything out. It's like, no, just you're a business. Hire the people that are really good at stuff, and hopefully you're the dumbest person in the room at the end of the day.
That's a really good point. I mean, from my vantage point at least, I do question sometimes why people have taken actions and then we're suddenly in a reactive position, right? Where it costs more, it takes more time. And I get it that sometimes capital or bringing in other people is not ideal, but in the same respect, it is, you've spoken about ego, and you've spoken about like being humble, right? And being able to ask for help, right? Seek out the advisors, and seek out the people that, kind of proactively rather than doing it after the fact, because it's tough to untangle sometimes.
Yeah.
What about you, Derek, in terms of advisors, or how did you kind of navigate that?
So, I mean, you rarely ever have all the answers. And, being a CEO of a startup is a lonely job. You have to make a lot of decisions, and all those decisions are tied around your neck, and you succeed and fail by the decisions that you make. And I think you're often, it takes a type of person to want to do this kind of crazy job, but it's really important to be able to lean back on a group of advisors that you trust, that you can kind of hash out what you're working through, and have a sounding board to make sure you're making a sound decision. Because sometimes it can't be with the people that are doing the other jobs, that you don't want to distract them from their marketing or their product or the rest. So it's always really, really important to have really good advisors, and you grow those over time too. Like, I've been doing this a while, and I have the group of people that I can always go to and be able to have that sounding board. It's very, very important.
Yeah. I know that funding is always a big topic here, right? And so in terms of, you all have kind of unique experiences to date. Derek, you're, as you mentioned, you're in the Stanley Decker portfolio. Leif, you're currently raising. Alvaro, you're on the other side of the table. So I would just kind of like to get a couple of minutes from each of you to kind of give a general overview of what you felt that process has been like, and what surprised you, perhaps what you would have done differently. Let me start with you, Derek.
Funding, the inevitable funding question.
It was coming, yeah.
Obviously money makes these things go, but I think the biggest thing that I've learned over the years is money is not a quick fix. Money does not solve all your problems. And as much as, there is the impetus to take every dollar you can get, less money you can do it for is always better. It forces you to be scrappy. It forces you to really learn your customer and be, belly to belly with what they need. And I've always believed, and to be honest, as you get investors, and I know Alvaro can probably back this up, or maybe not, you want to really show that you can do the most with less. You want to get as much money as you can get to solve a problem. You solve that problem, you get more money to solve the next. Too much money is a bad thing. You make bad decisions, you make bad spending. So smart money matters too. Like, it's easy to get dumb money. Smart money is really important.
What do you mean?
That will help you make. You want more than money. You want an advisor to come along with it. You want someone with connections in your vertical. You want someone that can bring you a customer, that can bring you a solution or a technology. An investor is more than the dollars they can give you. It seems like when you're starting this process that you just need all the money, You really don't. You need all of the smarts and the experience and the customers and the knowledge that comes with that money is so much more important than any dollar they can give you.
Right. Alvaro, in terms of those companies that are perhaps pitching to you, what do you see in terms of what they're asking for and perhaps what's worked well in terms of success in your portfolio, and conversely, perhaps, what's been more of a challenge than you would have preferred?
Yeah. Well, to Derek's point, right, like we have seen startups that they raise incredible amounts of money and they burn it within a quarter. And then, after that, they're thirsty again and about to die because they just, run out of it, right? And they don't have any revenue, they don't have any cash flow, and the situation gets dire very, very quickly. I think that the ideal scenario is where you're showing some traction, right? Revenue, and hopefully your cash flowing too. And then you can demonstrate that with the money that you raise, every time that you raise, you increase that revenue and you increase that cash flow, right? And that makes for a very, very beautiful story that enables you not to have to worry too much about, constantly being fundraising, being able to also focus on developing your business, right? And also it makes the fundraising easier because you can quickly demonstrate, look, for every dollar that you investor give me, this is the result, right?
Yeah.
So I think that's a very important perspective to have. And then, every single entrepreneur needs to decide what type of company do they want to have, right? Like, do you want to go public? Is that your goal, to have like perhaps a unicorn? Or would you like a very nice cash flowing company that is going to allow you to have like a lifestyle, that meets everything that you want, and perhaps you don't need to worry too much about, growth constantly, right? And that makes a lot of difference in the choices that you should make, because if you really want to be a unicorn, then you need to be very aggressive in the fundraising side, right? And you need to constantly be showing growth, not as much profitability, but growth, right? And if the approach that you have is the other way around, then perhaps you should take less investment and focus more on, how am I going to make this company financially healthy, and how am I going to turn this into a cash cow?
Do you feel, what I'm kind of inferring from this is having a strategy or a plan, and conversely, if you don't have a strategy or plan, then it can quickly go up in smoke. Is that kind of what you see in terms of these companies that either succeed, as you were saying, or conversely, crash and burn within one quarter?
I think that the path of very aggressive growth and trying to become a unicorn, it's a very high risk, very high reward.
Yeah.
But a lot of people, they just focus on the very high reward and they forget about the very high risk. And the very high risk is precisely, some of the things that Derek, Leif, yourself, and myself have been chatting about here, right? Which is, you lose track of some other things. And one of them is runway, right? And you're constantly in the need of raising, growing. And the moment that you don't achieve that at any particular stage, right? If you're not capable of doing the next jump, then the whole thing falls apart.
Yeah.
So, for whoever wants to pursue that path, that's great, but they need to have that vision from the very beginning, because all of the decisions need to be aligned with that particular goal, right?
Yeah.
If someone wants something different, again, like we have said, like just a company that is very healthy and strong financially, that is a very valuable path. And then another consideration that I would encourage everyone to think about is, what is it better to achieve 5 medium companies that you end up selling each of them for several millions of dollars each, right? Or getting one, very big enough, which might or might not happen, right? And dedicate the same amount of time, but at a much higher risk. Again, it's everything is a risk-reward trade-off, right?
Yeah.
So sometimes, scoring multiple fives takes you way long, takes you way farther than scoring 1-8.
So that's a good way of putting it. Leif, you're kind of in the midst of this in a way.
Yeah.
So in terms of best preparing yourselves and presenting yourselves, I know that we've been working on that for a while.
Yeah.
What have you seen that's been received well, and perhaps where have you had pushbacks?
So I've been raising for about 3 months now.
Yeah.
You have to be very concise with your story that you're telling investors. I made a mistake and I nerded out on some element that I thought was really cool and exciting, but they didn't get it, and they couldn't like connect the dots. And I had a bunch of questions after I'd pitch. I'm like, why don't you guys get this? It's so simple, But after doing that for longer than I probably should have, I adjusted, simple things. The business plan is still the same. All the technicals are exactly the same. It's just getting that story smoother so that when you get to the end of your pitch, there's no like, well, what about this? They get it. And that's hard to do because you're not speaking to an audience that you're used to. Like when you're in a company, you get a little bit of group think going on. It's like, well, this is completely obvious to me, but the investors don't know. A lot of them have been out of the game for a long time, and they're just sitting back behind their desk writing checks. So keep that in mind.
Yeah, I mean,
the room of people become super smart.
Yeah.
In addition, right, it's also about having your documents and your housekeeping in order, right? From your cap table to whatever your corporate documents, your contracts, whatever that looks like, because that is a reflection on how you've managed the company today. There's kind of an honorable way of presenting it, saying, "Hey, we have this together. We've got things buttoned up." Yeah.
I think I just want to say very quickly that that's a very important point that Ryan just made, right? So let's say, for instance, that you have a completely messy cap table and you're preparing yourself for a Series A, right? Or from Series A to Series B. At that point, the game starts to get pretty serious, right?
Yeah.
And when investors come in and they see, wow, this is a total mess, they have two options, right? They're either going to roll up their sleeves and say, okay, I'm going to help you clean up the mess, which is going to take some time. And for that, the value proposition needs to be like very, very attractive.
Yeah.
Or B, they're going to say, look, I'm not going to waste my time because you know what? There's hundreds of other startups that, present an equally good opportunity. They have their ducks in a row, and I don't need to waste any time with that, right?
Yeah.
So I think that's a very important point, to always have everything clean and prepared for due diligence. But more so when you go to raise your next round.
And then ongoing. Sorry, Derek. And then ongoing. Like, that's not something you should do at the end, right? Have the partners, legal, CPA, whomever it is, have them partner with you throughout their journey. Sorry, Derek, keeping interrupted.
No, you're good. I was just going to kind of dovetail on that a little bit. There's so many people out there with great ideas. There's a lot of great ideas. Even the ideas that this collective group has, there's probably someone out there with the same exact idea. Investor sees hundreds of different of the same ideas and groups of people. Like making sure your entire business, your IP ownership is locked up, your cap table looks good, your team is tight, like all of that stuff really matters, because an idea is an idea. It's going to change 1,000 times before it finds success.
Yeah.
It's really the team and how you build it and how you build that business that really becomes almost more important than any idea you can show them.
That's true. We've had a few questions, guys, and so to the audience, please, we've got about just under 10 minutes, so please submit your questions. And so the first question, Leif, is for you, actually. The question is, how did you acquire the lead list?
We subscribe to and you could do this for any company, I think, but you get a good analytics platform that segregates the market into different quadrants or, groupings And then you can, dig in to figure out, we're selling B2B, but you can figure out who those companies are in that quadrant that you want to sell to, find their names, and then reach out to a lead list capture company. You pay like 20 cents a lead kind of thing. But you just have to be very diligent about making sure that once you get that lead list, that you spend, the hours that it takes to clean it up before you put it into outreach or whatever program you're using to send those emails. Because then you're, managing setting up an email, machine it's way tougher than people think. You can't just start sending 1,000 emails a day kind of thing. It takes a long time to ramp up. And so I think it's useful to kind of consult with somebody that's set one up before. Otherwise, it'll probably take you like a couple months.
No, that's right. This one may be for you, Alvaro. I'd be interested. What are your thoughts on dynamic equity allocation methods, such as like the slicing pie method? Have you seen much of that, and what are your thoughts on that?
Yeah, I mean, everyone has different opinions, but my personal one is that simple is always best.
Yeah.
If you start with very complicated things, and like sometimes you see like startups that have like multiple classes of shares, and then they put weird clauses for certain investors, such as the most common one is like non-dilution for a certain percentage and things like that. It starts getting complicated, right? So I think subscribe to models that everyone understands, right? That they're clean, they're easy, and that will save you a lot of trouble for when things get complicated, which is typically once you are past your A round, right? So always seek simplicity and cleanness. That's my personal philosophy. If you start getting into too many details with every single investor, too many details when it comes to even like how your equity is split internally, and how that changes, and so on and so forth, it just gets messy very, very quickly.
And it's hard to manage going forward as well.
Oh yeah.
In addition to many other things. Derek, you've started a few companies. Have you kind of tried different methods there, or is it tried and proven for you?
Yeah, it kind of goes back to the what I said sort of at the top of really understanding, ownership and decision making and things like that. I'm all with Alvaro. Simple is best. If you need to construct some sort of elaborate system of understanding who deserves what, there's just problems to root. I mean, I'm not familiar with that particular method, but simple is always best, I found.
Yeah.
I just wanted to say very quickly, right, that research for entrepreneurs is that, there's sometimes it's as easy as a Google search, right? Like, for instance, Y Combinator has a lot of materials on, how to best structure your equity for founders, how to best structure your first rounds of fundraising, and so on and so forth. And, if you always, you're always going to have doubts, right? So, again, going back to the legal, if you have a good legal that supports you, just go and ask them the questions that you might have, right? But I think prioritizing simplicity and cleanness, I think that's paramount.
Yeah, that's great. Another question is, other than the corporate structure, what are the main pitfalls? I think we've gone over quite a lot of those. One thing I would say is getting kind of an agreement among the founders or the early stage employees in place early. Repeatedly, I see those who just jump in and they may be more product focused, and the roles and responsibilities are not necessarily hashed out, and there becomes dissentment in terms of who's doing what and who had what expectations. So one of my recommendations is to kind of get on the same page as your co-founders or those who are going to be early stage, and understand who's been doing what, and both all of you kind of have the same kind of vision and roadmap, because breakups among founders are commonly the reason why startups fail.
And I think also, as you're building your product, the company needs to own the product and the IP. I think a lot of times, if there isn't a structure built and you have a bunch of friends in a room building a product, and you don't have a structure around what you're doing, then once you go to raise or go monetize, now who owns it? Does Joe own it because he did most of the work, or did Sally own it because she did 57% of the work? Like, if there isn't some sort of structure around the company owning their IP, it becomes an issue.
Assignment of intellectual property, right?
Yep.
Everyone, make sure you have that in place.
Yes.
Yep. I would like to say that getting insurance early on saved us a lot of heartache. We got targeted by a large firm in the marketplace trying to kind of squash us with legal claims, unfounded, but having insurance allowed it so that we didn't have to pay any of our legal bills. They completely covered everything. So strongly.
There's a few questions that are very specific to kind of legal questions that probably fall beyond the scope of this, but I think I would encourage those that are asking to look. I'm a mentor here at Capital Factor. I know that there are some really good IP attorneys here that are also mentors here, so I'd encourage you to book some time with them and ask these specific questions. They're a bit beyond the scope of what we're talking about right now, but happy to help. In terms of the last question that we have is, is it best to use an LLC or a C Corp? Alvaro, I mean, I have my opinion on that, but in terms of what you're looking for, is it would you ever be interested in LLC, or do they have to come at you at a C Corp level?
Yeah, I think this goes back to what type of company do you want to have.
Right.
If you want to be prepared for fundraising, right, and taking external capital constantly, the common structure is a corp, right? If what you want to do is to have your own business, like for instance, I don't know, that you invest in real estate properties and so on and so forth, and create your own real estate portfolio and become a real estate mogul, then probably you want an LLC structure, right? So it depends very much on what you want to do, and I think again this is something that your legal firm can probably provide like pros and cons for each structure, but there's no one shape fits all, right? Like we have companies in the portfolio with one type of formation or the other one, and it very much depends on what is it that they're doing and what's their business model and what do they want to become, right? Another thing is that you always might be able to change that. It depending on what stage you're at, it becomes more complex. But it's not like you're gonna be stuck there. Like, you might choose the wrong one to start and then be able to change it later on. Yeah. Obviously, it's better if you choose the right one from the start, but I mean, sometimes you don't know how things are gonna evolve, right? Yeah. You might start with an LLC and then you decide that you want external money, and it's better to, issue shares, so then you have to transition to a corp and things like that.
Yeah, Leif, comments, yeah.
I mean, it's all good points, Alvaro. One thing I would like to say is like, oftentimes you don't know. Like when I started this company, we thought it was going to be just kind of a lifestyle company. We didn't see a huge TAM. We was like, hey, let's create an LLC. We eventually switched over to a DLC because we realized that there's a lot more opportunity on the fintech side of the business, and then switching over is painful. I would suggest if there's any chance at all that you're gonna go for gold, just do the DLC. It's not as complicated as people think.
Okay, Mark, I'm not sure if we have time for one more question or if that's okay. We've got time for one more question. Leif, coming to you, man. You mentioned insurance. Which insurance company did you go for?
Hartford.
Okay.
Yeah.
Shout out to Hartford.
Yeah.
All those guys.
They need the work.
Yeah. Tons of lean. Well, gentlemen, I thank you. this has been really, really great. And thank you for your time. And Mark's going to come in now, but thanks for your time. It's been excellent. Thank you.
Excellent job, gentlemen. I'm very impressed. That was a great article, a great conference, and I have to agree. Working for a law firm myself, it does get a little expensive, but having that insurance certainly helps as long as you straighten it out the first way. So this was a great panel, and we're going to go right into our networking for the next 15 minutes. But I want to thank our guests and our panelists. I was very impressed with the talk itself. So we're going to dive right into hop in for networking, and we'll come right back here in 15 minutes. Thank you. Hi, everyone. Thanks for coming back, and I hope that you enjoyed your networking sessions. We just had a great panel, and we're about to have a really tremendous fireside chat. We're going to have a really interesting talk with both Ryan Carpenter, who's going to be talking to Janis Machala, who's got a storied history and really interesting career that's going to talk about the role of leadership and culture in building a startup. With that, I'll give you Ryan. Thank you.
Good afternoon. Hi, Janis. How are you?
I'm great, Ryan. Thank you.
Nice to have you here. This is Jonas Machala. Very thrilled to have you for our fireside chat without the fireside. So why don't, if you can, Janis, just take a quick moment to introduce yourself and kind of go over what you do.
Sure. So currently, I am an executive coach to founders, typically CEOs of startup. I also work with leadership teams of startups. Sometimes I work with the C-suite of startups, somebody who's maybe at a further stage along in the company. Maybe they're at a Series A, Series B. But I work with a lot of seed stage, maybe even they're at the idea stage, contemplating starting a company. Because one of the things that I love to do is to help those executives who think they want to start a company, because part of it is understanding, are you equipped to start a company? Are you starting a company for the right reason? So
let's start there, Janis. So what do you see there in terms of, I guess, the broad brushstroke of those who are thinking about it, and those that actually do it? And then additionally, what do you look for in terms of the likely success, as opposed to probably not the best idea?
So I have a philosophy, and I you know this, that people first. I've been doing this work for 25 years. I started out as a CEO of a startup myself, and I've done interim fractional CEO work. I've raised tons of venture money, tons of angel money, tons of corporate money, and seen startups flame out, succeed. And to me, it comes down to two things. One is market timing, or the team, or the founders. And if you have the founder mix correct, you can fix the other things, a lot of other things. So what I look for when a founder comes to see me is, are they starting this company for the right reason? The right reason is not to get rich. No. Because that is such a crapshoot, quite frankly, in so many ways.
Yeah.
I had incredible companies in 2001, 4 IPO registrations of my clients. None of them made out because of the .com crash.
Right.
That was market timing, pure and simple. 2 of them.
It's a variable. Yeah, it's a variable.
2 of them sold for a pittance, and they had great teams. So I look at that. I look at, do they have an entrepreneurial genes? Because, if they've been at a very large company and they've had lots of resources, and they haven't really experienced what it's like not to have Big Co on their business card, and they have some, shall I say, magical belief about what a startup is like, they may not be starting it for the right reason.
How do you convey that message? Because, you're dealing with an executive or somebody of a corporate stature who has an idea. They come to you, and you are effectively telling them you're not well positioned.
Well, I explore what the role might be. So it might be that they fund the startup. It might be that they're on the board of that startup. It might be, so role might be completely different than they think it is.
Oh, got it. Yeah.
Or they might start it, but then bring somebody else in to do the heavy lifting. Maybe they're an active advisor. So I never assume anything.
Yeah.
But one of the things I make sure of is that I explore, were they an intrapreneur within that big company? Were they the 1.0 product person at that big company? Because I was the entrepreneur in the growth companies like Microsoft and Sun Microsystems. So, I came out of companies that were on toward growth, but I never was the keep the trains running on time person.
Right. So, there is a distinct mindset between the two as well.
Absolutely.
Being used to what you mentioned before, having those around you as opposed to perhaps taking a little bit more on themselves. Is there an awareness with these potential founders when you convey that, or is it hard to hear?
No, I think there's more and more of an awareness. Although I would say that anybody who's at the early stage and hasn't done a startup before isn't aware of how much work it is,
right,
how hard it is, and how much of a team sport it is, and how the team is so much different than the team in corporate America is.
Yeah. And from there, I mean, I know that you're big on laying the foundations, right? You talk a lot about that. You've got a book come out that discusses that.
Mm-hmm.
How do you have that conversation with them? Do these founders have an idea of what that looks like, or is that kind of a coaching exercise with you?
Coaching for what?
How foundation in terms of
I look at resilience. I look at grit. I explore the edges to which they can go. So, for example, one of the first things I look at is what are the conversations they've had with their significant other or spouse.
Oh, interesting.
It's very eye-opening to find out that they haven't really pushed the edges of those conversations, because their spouse didn't necessarily marry an entrepreneur.
Right.
I had a woman who was a very passionate entrepreneur, became passionate entrepreneur, but her husband didn't marry an entrepreneur. That marriage did not survive, because who he married wasn't the person she is.
Yeah.
I mean, she was the person she was, but he didn't see he saw the corporate executive, big job, big paycheck person.
Right.
So it tested the limits of that relationship.
Yeah.
I also see people who want desperately to be an entrepreneur, want desperately have the idea, but they can't get their spouse bought into it because the lifestyle has become too much of a hamster wheel that they're on. And that can be really frustrating, because I oftentimes will have teams come to me and they haven't quit their day jobs.
Yeah.
And they want the certainty of, well, when I get the money, I'll quit.
Mm-hmm.
And I'm like, it doesn't work that way. Sorry, guys, it doesn't.
Yeah.
Because investors want to know you have skin in the game. Well, we've been working on this nights and weekends. I'm like, no. They want you without a net.
Yeah.
And that's really hard for people to grasp. And I'm like, well, everybody wants certainty. They want to know that, yeah, you've got customers who are paying and that but you haven't taken any risk.
Right.
Why are you asking this complete stranger to take risk when you haven't?
Right.
And so that's another issue that I see facing in relationships where the partner is keeping the other side from, jumping in all in. And it may not be the partner. It may be the fear of that individual, that fear of failure of the individual, or of putting too much in. Where that also manifests is entrepreneurs who aren't willing to raise money from friends and family.
How do you mean?
Well, what they will say is, well, I can't ask my friends and family for money.
Right.
And I'm going, oh, so if you were Jeff Bezos and you were a friend of Jeff Bezos's, and he didn't ask you to put money into Amazon, and all of the people who put money into Amazon are now worth, I don't know, 500 million.
Mm-hmm.
How would you feel about that? I said, if I said no, but he asked me, I can't really complain or bitch, can I? But if he didn't ask me, I would be kind of miffed that I lost that opportunity and wasn't given it.
It's funny. I just read a story about Jeff Bezos' parents, who early investors who are now multimillionaires as well.
And have a foundation and put a lot of money into our community.
Yeah, very much so. Very much so. So you touched on the partner. So I want to kind of explore that with you. And you and I have discussed this previously in terms of, from your experience, what's the right dynamics in terms of a founder bringing on other co-founders, or similarly, two or more coming to you saying, we want to start something.
Right.
What's the dynamics that you see kind of both working and destined to crumble?
Right. I think it's very hard to be a solo entrepreneur. There's so much on your shoulder. If you're bootstrapping and you're not aiming for a very large, scalable business, venture fundable business, that's different.
Right.
I tend to work with growth companies that have big ideas, big plans. So mine's a little bit different in terms of the population. If you're going to build $1 million business or a $5 million business, and that's going to be what you run, you may be the only person for a while. But let's say that you're going to build something big and you need it, and you have a team. 3 is my magic number. I don't like even numbers. And the reason, and you know the reason for this, Ryan, don't you? The reason for this is a tiebreaker.
Yeah, you can't split even. Yeah.
And what I also look for is the complementary nature of the team. I don't want 3 software developers sitting in front of me. I want a business person sitting in front of me with 2 software developers. There's got to be somebody who has some customer facing, externally facing ability.
Right.
It might be that there's a CTO who happens to be articulate and who can talk to customers and who happens to be pretty UI able. Maybe they were evangelists in another company. Maybe they just happen to be really, really good at selling their technology and their architecture and what they do to the external community. That's okay. But at some point, if they're going to raise any significant money, they are going to need somebody in the mix who is marketing, sales, business development, some revenue generating side of this.
Yeah. And then in terms of the leadership style as well, if you have, for example, not to pick on them, but 3 software developers, who's leading the company there, right? As opposed to who's leading the product development. That's what we see a lot in terms of like business breakups, right? Partner breakups, because they're all focused on the one, but they forget about the other side of the business. Yeah,
I had an interesting one this year, which was 3 founders. They had worked together on a nonprofit situation, which was a huge digital marketing initiative. They came together to build a company, equal shares, another thing I'm not in favor of. And the self-anointed CEO, because they had worked together as peers, never really asserted his CEO-ness.
Right.
And it became clear that the chief product officer hated customers, wouldn't go in front of customers, wouldn't listen to customers, believed he knew what the product needed in it.
Right.
Well, guess what? That guy couldn't be in that role, and he wouldn't step aside to put the right person in that role. The VP of engineering was conflict adverse, wouldn't choose. So guess what? The CEO says, I'm done, I'm out.
Yep.
You guys work it out, and I'm going to go do something else, because he happened to be the one who had prior hits, was a serial entrepreneur, actually should have stayed as the CEO. But when somebody doesn't decide, it's over.
Right.
And they didn't have a buy-sell agreement. So, that company is not going to survive.
No, yeah, not at all. Yeah.
So, the problem was they were friends first and business partners second.
Yeah.
And I see that so many times.
What's your thought on there? Is it is that a bad combination, or is it? What are your thoughts on that from your experience?
I think you have to be prepared your friendship's going to die
Yeah.
and be willing to pay that price. I'm not saying it will. I think there's things you can do to mitigate that. And one of them is before you put any ink to paper, you explore all the things that could go wrong.
Right.
And you try and solve for them, as many of them as possible, right? What's your runway personally for money? How long can you go without a paycheck?
Yeah.
What happens when the VCs show up and they don't want two of the founders on the board? Who are you going to pick? What's the vesting schedule, reverse vesting on our shares? And are we all on board with that? And why does it have to occur? This is an interesting one. For example, Onyx Software, which is a CRM company from way back when,
Yeah.
the three founders rotated the CEO job because
Yeah.
they were all peers. They all liked each other. They were all friends from Dartmouth. So every 6 months, one of them was the CEO. They weren't co-CEOs. Everyone, because they all wanted that job and they felt like they were all going to be good at that job.
Yeah.
Then they went to raise venture money, and the venture capitalist said, nope, not going to happen.
Mhm.
And Brent Fry was the one who happened to be in the seat at the time that the venture guy said, not going to happen, pick one. And of course, Brent was in the role and said, yep, I'm the CEO. Well, one of the founders left as a result of that decision.
Yeah.
And, it didn't end well in terms of ill will.
Yeah.
I don't know to this day whether they're friends or not, but I suspect that, there's some bad blood as a result of how did they decide they were going to resolve that? I bet they didn't work through that scenario.
Yeah. Yeah.
And those are the things that you have to be prepared for every way in which our friendship is going to be taxed.
Right. Yeah.
Here's another one.
Yeah.
A company, a CEO that I worked with, every decision that got made, his wife unmade it the night that he went home to have dinner. So we would all agree on something. And then she would say, well, that's a stupid idea. I don't think you should do that, X, Y, Z. And the next day he'd come in and say, no, we're not going to do that. So he had somebody else running the company behind the scenes who really had no role in the company.
Interesting.
So it was like, okay, we're never going to get a business plan done. We're never going to get a financial model done because the person who's really running the show isn't even in the room.
Yeah.
And that was one of the few engagements that I actually resigned from.
Oh, is that right?
Yeah, absolutely. Because he couldn't stand up to her. Clearly was a pleaser. One of the saboteurs that I identify with is the people who are pleasers. And he probably wasn't going to be able to be a successful CEO, in my opinion.
Yeah.
But he didn't see it himself.
Yeah, that's tough. So in terms of those founders or startup CEOs coming on board, what's kind of the magic approach in terms of bringing in co-founders or partners that are going to complement you as opposed to kind of supplement you?
So one of the first exercises that I really, really recommend that founders do is a values exercise, core values. And this is, what are my core values? What are your core values? And you go off and do this exercise on your own first.
Yeah.
So if I get up in the morning, one of my core values is I'm going to do what I say I'm going to do, no matter what. I might communicate, hey, it's going to come a week later, but you'll get it. I just will not let something go if I've made a commitment to it. That's just one of my values. And integrity is another one of my inviolable values. And I worked for a company once that really didn't value that. I mean, basically asked me things that I believed were unethical to do. And I quit over that. So that was my line in the sand, right?
Yeah.
So I then have them bring those values back to a room and we talk through them. And we look at how many of these values do we share?
Yeah.
And if it's not a significant other, and I usually end up with, you should probably have about 5 to 8 core values. You can't keep many more of those in your head. If there's not like 4 of those shared, it's probably not going to work very well. And then from that, we actually work on an exercise to create the core values for what this startup is going to espouse.
And do they typically overlap most of the time with your personal values?
Yeah,
Yeah.
very much so in the early days. It changes slightly as a company matures and grows because you need values that encompass a broad thing like customers and whatever. But that's the sort of beginning point. And then the next thing I have them do is to talk about their strengths and do things like Strength Finder, because it's helpful to understand what the panoply of strengths is that's sitting around the table. It might not even be obvious, right?
No, it's often not. Yeah.
Right. Because who there knows how to sell?
Yeah.
This is one of the most important things that founders need to know how to do is to sell.
Right.
And I don't care whether it's selling customers, it's selling employees, it's selling investors. And what I hear from technologists all the time is, oh, I don't sell. I can't sell. Well, then you probably shouldn't start a company. Because everything that is done in a startup is about raising money, bringing people along in the vision and the journey. And those are sales functions.
Yeah. Growth.
And you can't outsource that. You can't offload that.
No.
The investors want to see the CEO in the room.
Yeah. Just to pivot a little bit. So when you've gone through that kind of diligence stage in a way, right? Well, let me ask you this. In terms of the makeup of it, we've spoken a lot about your ability to sell or your traits. What role does EQ play in this in terms of the dynamic of the group? And what have you seen work and conversely, what have you seen being a challenge?
EQ is incredibly important.
Yeah.
And I have an assessment that I use now.
Okay.
And it's a body of work called Positive Intelligence. And then the assessment's free. I'm always about free. In the early days, you need to be free. Strength Finder is, pretty cheap, so you can use that.
Yeah.
So I use Strength Finder. I use this Positive Intelligence work, and there's 2 tabs on that Positive Intelligence site, and it's just www.positiveintelligence.com. And what it gives you is a saboteur assessment. What the saboteur is, and the reason that people are rated low on emotional intelligence is because they're stuck in the limbic system of their brain, which is where fear, uncertainty, stress, and anxiety live.
Yeah.
And if you are riddled with these saboteurs, which are things like pleaser, hyper-vigilant, a stickler, a hyperachiever. There's 9 of these, it turns out. And if they're really strong, then you are likely to have some emotional intelligence challenges.
Yeah.
Now, the good news is there's ways to get out of those saboteurs running your life. And there's a whole process around that is doable.
Yeah.
It takes work. It's kind of like, we call it mental fitness in terms of reps in the gym and having a process for how you move from that limbic brain to the executive function brain.
Yeah.
It's very neuroscience based, but the point being, you also can tell the other score is called the PQ score, and you can look and see, are you in the negative part of your brain or the positive part of your brain? So you can see, oh my God, he's at a 24 out of 100. That's a guy who's hurting. That's a person, gal, I don't care if it's guy or gal, but that's a person that's really stuck in some fear place, some anxiety riddled place.
That must be really hard for someone to hear, particularly if they don't have self-awareness.
It is. Well, and remember I told you about the chief product officer?
Yeah.
His numbers were like really, really low.
Yeah.
But of course, he didn't believe that he needed to fix it or he had any incentive to fix it. It was just who he was. So that was incredibly low emotional intelligence. And that's when that person isn't interested in a solution. They just want to wallow in the problem.
Right.
But isn't that better to find out before you ever ink a founder deal. Founder.
This is been the takeaway here is that there is so much diligence and just diving in before you actually ink something, right? And what we've seen, what I see a lot is those who just ink or don't ink something, but just go ahead with the product without really diving into kind of who they're going into a business marriage with,
right?
And then as the stress factors increase.
Oh, right. Stress increases.
Yeah.
Decision making declines.
Absolutely. Yeah. And then there's dissent among the ranks and friendships are lost, like you said.
Oh, you know what, Ryan? There's something else when we were talking about, are you an entrepreneur or not? There's actually a great book I was also going to recommend called An Entrepreneur's Trail Guide.
Okay.
You can get it on Amazon. And it's by a coach, interestingly enough, and it walks everybody through the journey of these core things that I'm talking about.
Yeah. And
in the book, she has a link to a site. Should I type it in the chat? Where do I put it?
You could try it. Or someone from Capital Factory hopefully could provide a link.
Oh, yeah. She could pull it up on Amazon. That would be great.
Yeah, that would be helpful.
Andrea Sigetich, Sigetich.
Okay.
And there's a free assessment in here on what kind of entrepreneur are you? And it's bosi.in is the site. And I have every one of the entrepreneurs I work with do this assessment.
Interesting.
And are you a builder? Are you an opportunist? Are you a specialist? Are you an innovator? And knowing those types is really helpful for the founders.
Yeah. Haley's going to put it in the chat, everybody. So check that out. That's a great recommendation.
Okay. Yeah, I love this book. And I say, take it, use some of the.
I know of it. Yeah.
And the other thing I was going to say is that founders should do reference checks on each other.
What do you mean by that?
I know
you mean like calling people and
absolutely
like you're hiring them?
Okay, so here's the deal. Say you find there's two of you.
Yeah.
And you want to find a third person, and that third person says, "Hey, I got a buddy. I think he'd be perfect for this." And then you pull him in, and it looks great, right?
Yeah.
And oh my God, he's great. Oh, and he's willing to put $200,000 into this too. Wow, isn't that awesome?
Money. Yeah.
Okay. All right. Play this out.
Yeah.
He's putting $200,000 in. Oh, but he wants to be the president or CEO. Wow. Okay. Well, we don't want to. We want to build the product. So yeah, let him do that.
Mm-hmm.
Oh no. That second founder who doesn't know that person better say, could I talk to some of the people who've worked for you before? Can I talk to some of the people you did business with before? I think it would be really helpful if I, did some references. If they start equivocating, like, well, no, so-and-so knows me. I'm putting money in. Why would I do that? You got a problem.
Yeah. And it's having those awkward conversations up front, which is going to help down the road.
Exactly.
Trying to avoid the awkwardness and everybody's staying on the train. It's going to be difficult. So kind of moving from there, Janis, in terms of once you've found your rock star team, right? You mentioned earlier that you are not a fan of equal split.
No.
Equity. Can you explain why and what you've seen that kind of works? And
absolutely.
Yeah.
So what I've seen happen in the equal split scenarios is it's not clear who the leader of the company is.
Yeah.
It's not clear whose idea it was. And that's an important thing for investors to understand. And it says something about the sophistication or unsophistication of the leadership team. So as soon as they see the equals, they're like, oh yeah, it's one of those teams. Because what they will see is we've got a team that can't make the hard choices. We just took the easy way out and we did an equal split. When in fact, the conversation should have been who's putting money in, who's not, whose idea was this? Whose IP was this? How much is a software engineer worth versus I'm going to pull in all the first customers worth? Because if a software engineer, no offense to software engineers out there, is just going to write the MVP or mock up something.
We're going to get a lot of comments, Janis.
I know, but the point being that person may not be the CTO. They may not be the VP of engineering.
Yeah.
And so the venture people who come in are like, well, that person should have gotten 10%, not a third of the company. And so now there has to be a negotiation. Now there has to be a perspective on that. Probably isn't a very good cap table for from their perspective. I'm not making judgments on whether it was good, bad, or indifferent. I'm making a observation on the times I've seen equity allocations be questioned.
Right.
And the notion that, the CEO should have more equity. Where's it going to come from?
Yeah. Is that something you can walk back at the time, or is that?
Well,
that's a difficult conversation.
Once founder shares are issued, they're issued.
Yeah.
So the only way to do that is to put a large option pool in place and to put a lot more options into somebody's hands.
Right.
That doesn't feel right. That doesn't feel good.
Yeah.
So again, I'm of the opinion, fix it, do it right up front.
Yeah.
Build the foundation. I talk about a company as building a house.
Yeah.
And have the foundation of that house be strong.
Yeah.
And there's just a whole bunch of things that you want to do right. Otherwise, you're going to spend a lot of money on legal fees on the back end.
Yeah. We've spoken about it in the previous session, being reactive rather than proactive and really, putting the foundations in place.
Mm-hmm.
Yeah. Yeah. It's,
So that's one of them, because I've seen too many times where, the other reason for the 3 equal, not being equal kind of things is the chance of all of those founders being with the company a year from now is not high.
So what numbers have you seen to kind of back that up?
The most recent number I saw was, it might be as high as 50%.
Wow.
Mm-hmm. For a number of reasons. One is the company pivots, and one of the people isn't a fan of the pivot or doesn't have the skill set for the pivot, and suddenly it's like, ooh, yeah, I don't want to do this, even though it's the right thing for the company or the right thing to get funding.
Yeah,
it's just not going to work, or they aren't feeling the love of working together.
Yeah.
Or the runways run out. They have to go get a day job.
Yeah.
That happens a lot.
Very, very real. Yes.
That happens a lot.
Yeah.
They didn't estimate that it's going to take 3 times longer and be 5 times more expensive.
Yeah.
I'm making those numbers up, by the way, but
yeah, you get the point. Yeah.
It's always going to take more time and more money. And therefore, again, if you didn't do the hard work up front to really scope the tech, scope the financial model, to really understand it, one of the things that people underestimate is significantly the cost to do something.
Right. Yeah. Yeah. They under budget.
So I think mostly those items, all told.
Yeah. When you spoke about values before, I was intrigued by that because that ultimately is the cornerstone of the culture of the company, right? Presumably. And so, in your experience, what have you seen in terms of a culture clash? And that kind of goes back to what we were talking about before, those who perhaps have been in larger corporate enterprises where there is a certain culture and that they're used to, right? Whereas, trying to build something different, the culture of the place has to be maintained. What have you seen there?
Here's the one that really, really is problematic.
Yeah.
The trust model among the founders. I'm someone who I trust right up front. I trust implicitly. I come from a place of, I'm going to trust you until you prove otherwise to me.
Mhm.
Some people don't trust at all.
Yeah.
You have to earn their trust. Those are two polarity options of
Mhm.
trust model. And there really is nothing in between on trust. You
No.
know, and if you have someone who is very cynical in their trust, and maybe it's because they've been burnt like a ton of times or whatever, that is really problematic, because they don't coexist together very well
Right.
in a values-based company.
No, they're never going to get. Yeah, that's.
So that's one of the biggest that I see. The other is do as I say, not as I do.
Oh, the top down.
The founders have this set of values, but somebody in that leadership team or in that founding team says, well, that's for them, but I don't have to do it.
Right.
If, say, frugality is one of our values, or day one, right? Amazon's day one, right? And yet one of the founders is flying business class everywhere,
Mm-hmm.
or has showing off his fancy new car to everybody, or showing on Zoom his house to everybody, and it's not like anybody else's house.
Yeah.
Right? That is another one of those really like, ooh, why are you doing that? It's not showing our values of frugality or
Mhm.
day one concept.
Yeah. I've literally been in that position. Yeah. Where yeah. And it breeds resentment as well. And it breeds a sense of like, he's not part of the team. He's one of us, or she's one of,
Us versus them. Right.
Yeah.
Right.
And you don't have unity.
So those are sort of the biggest in my book is the, do as I say, not as I do, or the trust model. Those are the two biggest.
Yeah. So we're going to take questions in a couple of minutes, which I'm sure that we lost. But I'm just curious, one of the milestones, if not the pinnacle for a lot of startups, a lot of founders, is raising money. So I'm curious, when you're working with your clients around both preparing for money, for raising,
yep,
and also what it looks like when they've got that money in the bank. What's that journey like, and what is it that makes some succeed and others not?
So, there's three legs to that stool.
Okay.
One is team, one is technology, and one is market.
Right.
You can't get funded if you don't have all three. Post-seed.
Right.
Pre-seed and seed will allow you to have one of those three. So you might have a gap in team, like maybe you don't have somebody driving sales and one of the founders is doing sales in addition to some other role that they're playing.
Yeah.
Or maybe you don't have a CTO, you've outsourced development, you're going to bring it in-house sometime, and you've got a kick-ass program manager type or VP of engineering type who's basically riding herd over the contract developers.
Yeah.
That's one that you can kind of get away without. Market is probably the biggest one that you're not going to be able to convince anybody to move off of. And that's a couple fold. One is market timing.
Yeah.
Because that's one of the biggest single risk factors of a company in terms of it succeeding or not succeeding. And there's an incredible Bill Gross TED Talk on this, or YouTube video. And Bill Gross was the founder of Idea Lab, and he evaluated like every one of their portfolio companies. It was 500 and some on every factor possible. And market timing beat every single factor by an order of magnitude in terms of success or failure of his portfolio companies.
To what extent do founders have control of that? They don't really.
Yes, they do.
How so?
Well, you don't start a company if you're too late. If you're too early, you make the capital work as long as you can in order to get the market to catch up. You don't spend like you're a drunken soldier.
Yeah, right. Okay, that makes sense. So having your finger on the pulse around the market.
The other thing about market, though, is make sure you understand your competitors and how you're going to win against your competitors. Make sure you understand the market sizing and segmentation. This is one of the things that founders really, really fall flat on their face over. They're like, oh yes, the security market is, $12 billion and we're going to get 1% of that. Right. Okay. What's the TAM, target addressable market? What's the SAM and what's the SOM? And they don't go through the hard work of actually saying, what's the share of market we're going to get? Because this is the piece of that huge market that we really service. There's a serviceable market, and then there's the share of market. And get somebody who knows market development and understands that analysis deeply to do that hard work. It's one slide, but it's probably one of the most important slides that say, we understand our market. We understand our go-to-market. And that is probably one of the slides that can kill you. And people just treat it as a blow-off slide. Yeah. So so that's it. Market, tech, and time, and team. And also, the due diligence increases inordinately as you go up that, pre-seed, seed. I'm a big fan of starting a data room sooner rather than later. And having it and just adding to it. Because as investors come along and are more sophisticated, they require more. So why don't you have the lease in your data room? Why don't you have the buy-sell agreement in your data room? Why don't you have invention assignments in your data room? One, it makes you different and more mature looking and a founding team that has their shit together. It shows that we're transparent, and that's one of our values. We're not trying to hide anything. You can password protect it, so you only give the data room access to people who are serious.
Sure, that's easy. Yeah.
But I am a big fan of start your important processes early, and that's one of them.
100%. We were just discussing that in another panel.
Okay.
So when in your experience, and we only have a few more minutes, and anyone that has a question for Janis, please put it forward. Last question from me. Once they have the money, significant money, how have you seen founders rise with that collectively, and what have you seen
Good question.
that brings people down?
So not paying attention to cash flow and burn rate.
Of course.
That is probably the number one, is having a good process for what are major purchases, what aren't major purchases, who's tracking payments and spend. No offense, Ryan, but legal fees, so few people pay attention to those, and yet they can rack up a lot in a short period of time. And
reasons behind that,
Well, it's because you don't ask the question like, okay, I'm giving you this. What's the scope of this? What's the work involved?
Right.
Is there something I should do to make it less, because they'll just outsource it and not realize that if I put it all in the law firm, it's going to cost that much more.
Have an idea of what you're asking and why you're asking it and what you need from them.
Exactly. And everybody will put work to a budget if you ask them to, but if you give them a blank check, they'll spend the blank check. So that's one place. I had a startup, no lie, last year. When I started working with her, she was funding the company herself. She had raised a couple $100,000 in friends and family money. Of the couple $100,000, she had spent $100,000 in legal fees.
Wow.
No lie. Now, shame on her for having a law firm. And she was an attorney. This was in the attorney law tech market. Shame on her for letting it get that far out of control.
Yeah.
And she also hadn't hired a true startup attorney.
No.
So it was somebody who didn't understand how to work with startups, and wrong structure.
Yep.
Wrong caps. Wrong equity allocation model. We had to redo the whole thing.
That's terrible.
And it cost us another $20,000 to start over.
That's terrible. That really
so that's an egregious example of one, not hiring the right law firm.
Yeah.
And I took it out to my friends in the legal community. I said, okay, here was the services that were done, and how much should that have cost? And they were like, oh, I don't know, 20, 25,000. I go, thank you very much.
That's, yeah.
So it's, don't change your mindset about spend too much.
Yeah.
And like, don't suddenly hire recruiters to do everything outsourced, because recruiting fees can be really high. Use your network, use use your employees to do referrals. I mean, again, you can spend a lot of money on staffing.
Yeah, it's really great. We have a couple of questions really.
Yeah, what do we have?
So the first one is, what are your thoughts on dynamic equity allocation models such as slicing pie?
Oh, I have such a slicing pie story. I hate it. I hate it with a vengeance, because it's got way too much subjectivity to it.
Yeah.
And what happened in this particular situation that I was with is the slicing pie, the guy who implemented it and wanted to use it was one of those people who didn't quit his day job at Cisco. So he valued his time at a very high rate. The guy who was quit his job, had put all of the skin in the game, was putting in a huge number of hours.
Yeah.
Cisco guy was putting in the money. Well, sure, it's easy to put the money in and take your slicing pie equation. So it was completely out of whack because of the way in which slicing pie looks at money versus sweat equity versus rate of person's work.
Yeah.
It was a nightmare.
Yeah.
And we took it to a couple of law firms and they wouldn't touch it.
Yeah.
They were like, start over. You guys really screwed the pooch on this. And so it was my first exposure to it. And I was like, oh, I don't like this, because it sets the founders up pitting themselves against each other and arguing over rate and amount of effort.
Yeah. And that breeds dissentment, like we've said in the past. Yeah. One of the questions we have, I'm not quite sure if I follow. What are the list of documents or agreements, such as a buy-sell agreement, that should be in place establishing a solid legal entity?
I think that the buy-sell agreement should be negotiated. I mean, that's obviously, you do that in concert with setting the entity. In terms of, if you're hiring somebody new to the party, an NDA, absolutely. Because I had a situation where one of my companies was talking to an executive that they had worked with at a prior company, and they had given him a huge offer. He ended up not taking the offer and going and starting a competitive company.
Yeah.
That he got venture funded and they didn't.
Mm-hmm.
And they never had him sign an NDA or non-compete.
So many times I see the lack of NDA.
So that's the one thing.
They're constantly looking for the networking, and they don't seem to get it. I would also say, we've touched on it, but the assignment of intellectual property rights is also fundamental. And what we've discussed earlier.
Oh, yes, actually before incorporation, because they might have been working on the code.
That's what I mean. Yeah, before incorporation, and then also having a founders agreement of some sort, some degree of being on the same page, excuse the pun, where everybody's understanding what the ethos is and the roadmap. It's just for no other reason than just getting everybody on the same page.
Yeah, I think there's some document you could put together that's not super legally, but is like a letter of intent almost, right?
Yeah, it's almost kind of like the values again.
Yeah. Oh, absolutely,
like
that kind of stuff.
Everybody just kind of getting on the same page, I think, is hugely helpful.
Yeah.
And then, finally, I think that would probably cover it. One last question we have is, can you repeat what someone needs to have in hand prior to meeting with an attorney? Here's what I would say from an attorney standpoint. To maximize value, both from a cost efficiency and also like a partner, know what you're asking for, know what your destination is, and try and work with them in terms of a fee structure. Mm-hmm. All of these, reduce the variables, right? Those who are truly startup attorneys shouldn't be looking to make huge amount of money. What they should be doing is to establish a relationship and a partnership. And so know what you're asking for, know what the scope is, understand what the fee structure is, and look for someone who's really going to be a partner with you. One last one. I know Mark's been very patient with us, so we've got to be very quick. After a co-founder breakup, and if one walks away completely, is it better to take the IP to a new corp or okay to keep the existing? That's a complicated question. So I'm not sure we could address that, but if you want to contact me in the networking or something, I'd be happy to address that. There's a lot of nuances and layers to that question that probably exceeds our time, but
yeah, I think the answer is it depends.
It depends
on if it was a friendly breakup or not a friendly breakup.
Yeah.
It depends on if there was a closeout agreement signed.
Ultimately, it depends on who owns the IP. Is it the entity or is it the individuals? Yeah. So,
right. Yeah. So
Janis, this has been amazing. Thank you very much for your time and your guidance. I know that this is going to be very well received.
And I'll put that book in the chat.
Yeah. And if you can, also the website that you recommended as well.
Yeah.
I think that would be great. So anyway, thank you, Janis.
You're welcome.
It's a pleasure.
And fun.
Well, what a treat. That was excellent. I really enjoyed that personally. I'm really glad we got a chance to hear that conversation. So right now we're going to our last networking session of the evening virtually. Remember, we're still doing the networking happy hour at Olive and June today at 5 o'clock. So please join us there. But with that, we'll go into networking for the next 15 minutes and then lead into our final panel for the entire week. Thank you so much. Hey everyone, we have got an absolute crown jewel of a panel for you to round things off and cap things off for this startup week, which has been absolutely phenomenal. I want to thank Jacqueline Hughes and the rest of the Capital Factory team who have separately and together built a tremendous platform for us to meet and talk and do this thing virtually. And I hope that we'll all be able to do this thing in person later tonight at the various happy hours, especially the legal one happening at Olive and June at 5 o'clock. With that, like I said, we've got a really interesting panel coming up right now, and I am really excited to hear it myself. So I'm looking forward to hearing about actually building connections and capital across borders. With that, I'll give you our panel. Thanks.
Mark, thank you so much for that lovely introduction. I don't even know where to go from there, but I'll try. Welcome to Founding, Funding, and Building Across Borders. I'll be your host. My name is Damien Amay, 3-time founder. I'm actually launching a network to help international founders launch across borders as well, called Boundless One Ventures. I'm also an advisor at SOSV Ventures, which is a fund that launches international startups primarily in Asia, but also expanding across the globe. So with that, I'd like to introduce the rest of my panelists that I'm very, very excited to have here with me today. I've got Aaron Gilmore, founder of Brass Roots, based out of New Orleans. Please say hi.
Hey, everyone. Hey, Damien. Thanks for having me.
You got Jonass Philosophy, first-generation U.S. citizen that founded Open Teams, a software company that makes it simple for companies and developers to find products specific for open source software to make building their digital products much easier. She's also launching a venture fund focused on investing in Africa. Say hi, Jonas.
Hey, everybody.
And then lastly, we have Chris Light, head of biz ops at Causal App. Causal App is a financial modeling software similar to Excel, but no code and about 1% of the formulas and time to take to build models. Say hi, Chris.
Hey, everyone. Thanks for having me.
Awesome. So you each have unique stories on how you got started as entrepreneurs and your involvement founding and funding across borders. You know, I want to get into each of your stories individually and also get into how you structure your businesses and how you intend to operate in markets across borders moving forward. So first, I'll start off with Aaron. Again, founder of Brass Roots, a New Orleans-based snack food company that makes snacks from puffs to butters to chips. I think you even have some more snacks coming down the line that you'll tell us more about. Aaron and Brass Roots Snacks is one of the only companies in the world that produces snack foods out of the next great superfood called the Sachi Inchi seed. And the Sachi Inchi seed is grown in the jungles of Thailand and jam-packed with protein, low fat, and has been known to add additional health benefits as well. If you could get into a little bit of how you got started, Aaron. You know, I know that you have a unique family story, and we're very, very focused on health and childhood. So if you want to start us off there, and then we'll get moving to kind of how the business grew from there.
Yeah, thanks, Damon. I first got into nutrition and healthier eating and diet really through my father's health issues, actually. This is 2010, so over a decade ago now. He was very close to a heart attack on a walk with my mom, and started having shortness of breath, lightheaded stuff. And thankfully, they immediately went to the hospital, and his left anterior descending artery, which is also known as the widowmaker artery, because it unfortunately so many people pass from that artery being clogged. It was about 85% clogged, and so he got a stent put in, but had to take a very close look at his diet. We learned it's something that runs in my family. And so I got extremely interested in nutrition, how diet can affect your short and long-term health. And that I'd always been interested in starting my own business, very interested in entrepreneurship, had my businesses as a kid. And so married those two and eventually got into healthy snacks.
Awesome. And then I know you also, it wasn't always an easy journey. There was a lot of testing, plugging, playing, finding out your customer base. And then you have kind of a little bit of a funny story on testing out snack foods on your wife and some of your friends to get started, right?
Yeah. I came across the Sacha Inchi seed for the first time well before actually Brass Roots existed. I came across it for the first time, in fact, in a Whole Foods bulk bin out in California, and I kind of fell in love with it as an ingredient because it was nutritionally so strong, and then found out also that it was free of the top 9 allergens. So anybody with peanut allergies, tree nut allergies, things like that could benefit from this seed because it's very similar to a peanut and a tree nut. In fact, it's called the Incan peanut because the Incas in South America harvested it and ate it for thousands of years. So I immediately questioned why this wasn't a bigger thing, because it was nutritionally strong, it was tasty, and found out eventually it was because of supply chain, which we can get into. But I brought it home, and basically I threw it in a food processor first to see if I could make a butter, as a peanut butter lover. And it sat there waiting for several minutes, and eventually it turned into this like amazing golden butter that was that had an aroma very similar to peanut butter. It was delicious, and that kind of sprung me. Like, I started making every snack you could possibly think of with this thing, testing it on my wife, having friends over to try things out. And eventually we launched because we ran Facebook ads for targeting people with peanut allergies, and gave out samples, and then tracked conversion from sampling to orders. And the conversion rate was really high. And that's kind of when we knew we had something. And that set off a lot of chain of events to create that.
Yeah, to say the least, right? So, but once you realized, look, you had a product, you had like this almost miracle food that you discovered out of a bin in Whole Foods, and then now you've tested it out, you've got your product, but then what happened next after that? It's not so easy. Like, once you, it's funny, as a founder, it seems like you had product market fit, but then you also needed to source the product, right? You needed to source the seeds in mass. How did you do that?
Yeah, I just condensed that story into about 20 seconds, but really it spanned several years, because like you said, once I started tinkering in the kitchen, there was actually a much longer process of figuring out who I could actually source Sacha Inchi seeds from. Mm-hmm. And it started off with Googling, truthfully, and eventually found out over lots of time and discussions that the Whole Foods, where I had actually found it in the first place, was sourcing from a supplier in Thailand. And then eventually I was able to get in touch with him specifically, and he ultimately became our supplier, and I consider him much more of a partner in the business. I very rarely call him a supplier, because We're like family at this point in a lot of senses. And
what was his name? I know there's a funny story on, you
Yeah.
built up a lot of trust. You've developed a relationship, but you also have a funny story on your first meeting with him as well.
Yeah.
Fu Chan, right?
Just Chan. Yep.
Okay.
Yep. So we had many emails became video chats, leading up to this. And we learned a ton about each other. We learned, that, for example, that, that I had experience in snack baking, and I had a very clear plan for the way to launch a brand new ingredient that nobody had ever heard of. He bought into that. I learned a lot about him, that he actually was a Vietnam War refugee who came to the U.S. At about the age of 13, and put himself through high school, college, and then moved back, kind of with this mission to use agriculture in Thailand. And so we learned a lot about each other. We connected over where we thought Sacha Inchi could go, especially in the U.S. market. And eventually he planned a trip to New Orleans because he had some family in Tennessee. And our first meeting, this is right before my first child was born, my daughter, and he knew that, obviously, because we've been chatting a lot. So we both showed up together at our first meeting point. He had a bunch of gifts that he brought from Thailand for my wife and my daughter, who was yet to be born at this point. I had a bunch of gifts from New Orleans for him. Obviously, none of that was planned. But then he also had brought over nothing in his suitcases, really, but Sacha Inchi seeds. He had these two big. He and his wife, in fact, had these massive suitcases full of Sacha Inchi seeds for us to try and utilize. And I actually still have a picture of all those gifts he brought, and of course, like the two of us standing on the streets of New Orleans with a suitcase that was almost as big as him, full of
pounds of seeds.
Pounds, and I mean, it's
give the audience an idea. I mean, they were like pounds of seeds in the middle of New Orleans at your first meeting, right?
People's weight worth of Sacha Inchi seeds, for sure. Yeah.
Very cool. Yeah. Very cool. So you meet for the first time, you guys hit it off, even though you had already developed a relationship along the way. For what it was, you were chatting for a year or so?
Yeah, about a year leading up to that. Yep.
Yeah. And how did you eventually developed a partnership, which involves contracts, which involves, distribution deals, right? Across borders, like from Thailand, here in the United States, lawyers. How did you do that? How did you, from someone that you've never seen in person, to obviously seeing him plus his 200 pounds of Sacha Inchi seeds? How did you go from zero to contract and upon your first meeting in person?
Yeah, it's a good question. I mean, the first thing we established was just, I think, discovering a lot about each other and what our vision was, what our plan was. My vision was I wanted to introduce this as an ingredient in the US and North America and really get it to the size ultimately. And I still have this vision of, size similar to any of the other tree nuts out there, cashews, walnuts, etc. And then he had, what he wanted to do in Thailand was really ultimately provide a stable source of income, actually, for some schools that he operates in Thailand. And then eventually we connected even more when we started talking about what my kind of youth mission was here in New Orleans, where we help kids from lower income families learn about nutrition and wellness. And so I guess my point, Damien, is there's this moral framework that was established and agreed upon. And there was also kind of a sharing of vision that clearly aligned with each other. And then, eventually you learn what everybody's incentives are in this potential partnership. You learn what our goal is, each of us individually. And then it becomes pretty clear that a contract is going to be required And in some ways, it's even more required if it's an international relationship, because otherwise it's hard to memorialize what you're doing. You're so far away that this, I don't even consider it a contract without loopholes. You know, I truly believe that if either of us wanted to step away, it would be no issue. But the contract is sort of like our one memorializing document, and we just wanted to do it to you know, to put something on paper and then move forward with that shared vision. I mean, to me, it's less of a contract and more of like that kind of shared building block and path forward in a way. But to your point, you know, it does. It tells you when we started discussing this, and we actually brought it to the first meeting, like the in-person meeting in New Orleans. Ultimately, we wanted to leave there with a signed contract together. But throughout the negotiations, you learn a lot about each other too. And that's one of the more helpful things about that contract. And it wasn't even a hard negotiated thing at all. It was just a back and forth, like, you know, me knowing what our growth goals were. So he knew what his minimum volumes could be, for example, in this contract, right? What the minimum amounts of sacha inchi he thinks he could provide and we would purchase from him. And then eventually, I think so when we sat down to actually sign that, much of it had already been discussed over numerous sit downs and sharing a vision and stuff like that. So it wasn't a hard thing. And the other thing, I think the last important piece of this, I knew that I was going to have to take a lot of risk to do something like this, meaning, you know, I would have to take on investment to do the consumer education that's required to introduce people to something like this and why they might benefit from it. So I did. It was a very easy conversation when I asked him for exclusivity, where we would be his exclusive customer, aside from one other customer that was already buying from him in North America. And he was fully open to it because we had already agreed upon so many things in the vision and the moral framework that it was a pretty easy ask, and we added to the contract.
Excellent. And it's not a Thailand based contract. It is a US based contract, correct?
Yes, it's a US based contract. He's very well versed and educated on you know, all things in the US legally and from a business perspective, given the time he spent here. So correct. Yeah, I believe it's a New York document.
Excellent. I'll get back to, there's another part of the story that I want to get back to, but I'll let, I really want to chat with Janis a little bit about her experience. She's got an incredible experience growing up in Cameroon and sort of using cultural differences as an advantage for her. That is absolutely incredible. Like you begin in Cameroon, right? At the age of 10, watching your father launch a commerce business that originally started out from selling food and electronics on the street. And then it grew to 10 stores in several cities, and you're watching this happen. And then you're getting involved at a really, really young age, which was really, really cool. And then you're a first generation entrepreneur and, or first generation US citizen and now entrepreneur here in the United States. So how did you use that style of negotiation that you learned in Cameroon working with your father to your advantage with your first clients at Open Teams, which was one of the first companies that you founded?
Yeah, definitely. So thank you again for having me on the panel. I was born and raised in Cameroon and moved to the US probably when I was 15, almost 16 for school. But when growing up, my dad used to take me to his stores, and the good thing being in Africa, or at least in Cameroon, it was, you know, you never buy the price that you're given. You always have to negotiate the price either to like 50% or less. So I remember when I came to the US and graduated from college, got my first job, and I decided, you know what, the entrepreneurial route is the route that I want to go. You know, becoming an entrepreneur definitely teaches you a lot, but I can say that negotiating my way into different things has helped me get to where I am today. One of the first companies that I had was actually called Data Gig, and then Open Teams was my second company. But I use negotiation in a lot of things, everything from either, speaking with investors, finding customers, or even negotiating our way into, getting into a conference. I remember this particular example when we were trying to go to a conference out of North Carolina. We were fresh, still fundraising for our pre-seed round. And the tickets to have a booth at this conference I think it was like $5,000 for a startup. And I remember one of my co-founders saying, hey, we can't afford to go to this conference because we don't have the means. So I ended up figuring out who is the person that I can reach out at a conference, emailing them, and then trying to negotiate my way into, hey, can I get maybe like a discount or something? We're a brand new startup. We're just trying to get by. And after a few negotiations, I actually got tickets as a company to the conference for free. So I think that was one of the things that one of my co-founders was like, I didn't even know you could negotiate to get into a conference, but you were capable of doing that and actually, helping us go at a conference. And that was huge for our company because it was something that had a lot of our user base. And that conference helped us get something like a little bit over 5,000 users at a company.
Very cool. And then you used, and also to get some of your first clients, I think you had reached out, to individuals via LinkedIn, and you kind of tested, plugged and played via social media to really see if there was product market fit even before there was actually a product, correct?
Yes. And again, as a startup, right, you have to sell even when you don't have a product. Right. So early on, as we were just testing out, the game and putting ourselves out there to understand if there's even a problem and if the solution that we're trying to solve is the actual solution. So we went out there, and because we're a marketplace, we're looking for both service providers as well as customers. So I will go to the service providers and say, hey, what are your biggest challenges? What are your pain points? How can we help you? Does a company even like Open Teams make sense to you? And a lot of the time they said, yeah, like if you bring us customers, like as a company, everybody wants to get more clients and grow their revenue. And then from the client base, we said, if we make your life easier, either by streamlining the service providers on our marketplace, vetting them, and then making it easy for both of you guys to transact, what would that look like? And in our first year, we were really struggling putting things together. But then as we grew last year, 2020, even though with the pandemic and everything, our company made a little bit over 20 million in transaction volume. And this year we were right on track to double that amount of money. So early on was challenging, but as we grew, things got better.
Very cool. And so you decided to move on from being a founder and then go into the crazy world of being an investor, right? You're launching a fund that is focused on investing in the continent of Africa, and to my knowledge, which I see a ton of opportunity there. The average age on the continent is about 19 years old, and there's rapid urbanization. About 50% of the population lives, within a mile or so of an urban center, right? So there's plenty of opportunity there. Yet at the same time, even though a banana harvested minutes away from Nairobi in Kenya costs the same price as it would cost in London, right? And even though that's thousands of miles away. So what sectors will your fund focus on investing in Africa, and kind of knowing some of the problems but opportunities as well that exist in Africa? What sectors are you planning on focusing on? And then what have you seen being built around food distribution in Africa, and how will you structure some of those deals?
Yeah. So, and again, they say the African market is one that I'm personally passionate about, not just because I come from there, but because I think Africa has a lot of challenges, and those challenges are opportunities. Like you mentioned, I mean, we have a vibrant young population. A lot more people now have access to internet connections. I mean, the tech ecosystem is growing very rapidly. Just this year, we saw a little bit over 5 unicorns of tech startups on the continent. And earlier this year, I started angel investing some of my money and getting on phone calls and getting really excited about the opportunity on the continent. So that's why I decided to take the leap and actually go out there and fundraise and raise money and invest in African tech startups. Some of the sectors that I focus on, I think my company is sector agnostic. But if I was to pick a few sectors, I'll pick fintech, agri-tech, health tech, ed tech, marketplaces. These are industries that are really innovating right now on the continent. And I see why they're innovating. Like you mentioned, the food industry right now is also growing because a lot of the African market has a huge agricultural base. I actually had one startup. I was unfortunately not one of the investors, but they recently raised something like 4.2 million. It is a company that is using technology to help with like food processing on the continent. They're starting with palm oil, and then they'll be expanding to other industries and geographical focus in the future. But the reason why I still think that food is still expensive, even though we have such a growth in that sector, is just because a lot of it is still not technology savvy, right? In the UK, we might not have a lot of farmers, but a lot of things are automated. On the continent, we're still very labor intensive and very little automation. And I think there's a lot of opportunities to grow. And as we get better in those industries and implementing technology, I think we might be able to reduce some of the costs and make it easy to actually harvest crops and actually sell them at a cheaper price.
Very cool. And going back to you, Aaron, I know, and we kind of touched upon the pandemic, and I want to get into everyone's sort of pandemic stories, right? Everyone here was each at a company during the pandemic, and Aaron, your business depends on shipping from Thailand, Colombia, Peru, and grocery stores operating, and global maritime trade dropped around 5 to 10% during COVID. And, the first stay-at-home orders were around February or March. You have a few different stories centered around pivoting into e-commerce, right? And in addition to that, another story about how an investment deal almost didn't happen.
Yeah. So we launched Brassroots really as a brand towards the end of 2019. And so the expectation was, retail would be a big part of the initial, end market for us. And of course, once COVID hit, around that February, March timeframe, every single retailer that normally wants to innovate and bring on new brands and new products to give something exciting and valuable to their customers, that was not a priority anymore at all. The priority was making sure shelves were stocked, figuring out why toilet paper was nowhere to be found, things like that. And so we had no opportunity to sell into retail for basically the entire year, and we knew that was going to happen. And so e-commerce was always a goal of ours to have, but it was kind of secondary, and then it became kind of that primary sales channel for us. And so we brought on a team to help us, build the website, make sure it was really well configured for specifically for e-commerce. Before, it was very informational, but we had to change it around to be sort of commerce focused first. And then we educated ourselves and brought on a team to help with digital advertising and acquiring customers through our website and Amazon. It's been a challenge too on the supply chain side because as you mentioned, we have to, of course, import our Sacha Inchi seeds, and the time it takes now for seeds to get to us is 3 months or more, which used to be 6 to 8 weeks. So it's basically doubled, and so we've really had to change around the way we order, the way we project demand, and finance bigger purchases of Sacha Inchi seeds too. So that's required a lot of planning, and then you mentioned we recently took on a new investor. It was a pretty pivotal point for us. Thankfully, they're a large strategic company focused on nuts and tree nuts and similar commodities. But we had done all of our meetings and due diligence except for their trip down to New Orleans. And so this was, we were expecting to close sometime early 2020. The last thing to have happen was that they needed to come down and see our facilities, our production facilities, meet our team in person. So they'd met me in person, but not our team. And thankfully, as I told you, Damien, I think it was probably the last flights they all took in the entire year of 2020. But they came. The week after was when the biggest trade shows all got canceled, natural products in the West. So they came, and eventually we did close the investment round with them. So their conviction, I guess, stayed through, thankfully, but it was very, very close to that meeting not happening. And who knows, what would have unfolded, I guess.
Wow. So, that's incredible. Like that, and a matter of weeks could have altered the entire path of the company. Mm-hmm. So Chris, you have a lot of experience operating internationally. Counsel was founded in the UK. You have offices in the United States. You're running the US operations and also international. What's that like for you? What are some pro tips to doing business out of the country and across borders?
Sure. Yeah. I'm happy to dive into it. I think the short answer is it's not easy today, especially for a startup. I think as I've kind of learned and continue to learn, I think often the one startup tip I would say is lean on people that have been in a similar place before. We all have networks and people in our networks that have founded something, or their company may be cross-border, may have a similar setup. And so just always kind of branch out. And I found that rather than reinventing the wheel, someone's probably already gone and figured it out. And so a lot of times I find myself networking with other people in the space where, and for the UK, some of the stuff that comes up in the UK, I sit in New York. But as Damien mentioned, I kind of oversee and run everything internationally. And so there's a lot of UK specific things around our employees, around like benefits, around like setting up a pension, for example. In the UK, everyone's required to have a pension and it has to be set up a certain way. And so being able to leverage people that have done it there and leverage on the ground is something that it's continued to do. And it's definitely a tip. I think the other tip is definitely if you don't have to set up an entity in a different country, don't do it. We have we're a multi-entity company with 10 employees. And the reason really is because as a company, we wanted to take investment round in the US, but the founders are based out of Europe and the UK. And so as a result, we naturally need to have a multi-entity structure. So then the founders could be employed by the UK entity, and then we have the US entity for investment and kind of as a parent company. But in a lot of situations, if you're a founder looking to kind of go international and you want to hire someone like myself in New York and you're sitting in the UK or going the opposite way, there's a lot of services out there that you can kind of employ easily, and setting up another entity, another country usually is probably the last thing you should think about doing until you get to scale. I think we're learning there's just a lot of operational overhead for a small company to have to maintain. And there's services out there like Deal, remote.com. There's a lot of ways to compliantly hire people in other countries, and they take care of a lot of that paperwork.
What would you suggest, Chris, to your first suggestion was to not set up multiple entities, until you really need to, until you really have to, right? But what are some of the like the benchmarks that you would have set for yourself as a company before launching like an entity like across borders, right? Is it a certain amount of customers? It is a certain amount of revenue, or how does that work in your mind?
Yeah, sure. There's a couple different factors. I think for us it was really kind of where the team is based. And so having kind of the US company be a parent company, and having kind of the founders and kind of the people setting the direction of the company in a different country often lends itself to needing a separate entity. I think generally speaking, there's like two things that people look at in terms of setting up another entity. The first is kind of commercial, so doing business with other people. And I think in the US specifically, a lot of US, if you're selling to US customers, they often only like to do business with US companies because it's just easier. When they get an MSA or a contract that says there's a jurisdiction in another country, or like you're sending to an international bank account, especially kind of smaller companies always have a bit of pause. And so you kind of will want to think about if you're going to sell only into the US or only to another country, then maybe it makes sense because there's a lot less friction to kind of doing business on the commercial front. And then, so that's one element of it. The other element is like the team building side. It's relatively expensive to kind of hire people through an EOR service or an employer of record service like Deal or Remote. So once you get a certain mass of employees, the economics kind of flip and it makes sense to get an entity. And then there's also just benefits to having kind of how you can move people around, what your company can do, if you can kind of have people immigrate into a country through an entity. So there's some things as you look to scale up operations, but if you only want to have one or two people in a country, and it's not a country you're really selling into, there's probably other solutions that can save everyone time to allow you to focus on kind of the big picture business stuff.
For sure. And you have, and it's two entities that you have, right? There isn't, so I know you're selling all across Europe and in the United States. And I think you're doing some business like in India as well. I think there's a third.
Right. So we kind of, from a team perspective, just to kind of, I always tell people, everyone asks, like especially when I talk to people in the US, they say, oh, where's your team based? I saw the London on the website, or the founders in London. So like we are kind of, I guess, the child of kind of the post-COVID world, very globally distributed. I sit in New York. We have someone in Hawaii, someone in Boston, someone in Israel, someone in India, two people in London, and someone in Germany. Maybe I'm forgetting someone as well. So we are very globally distributed. And then from a customer perspective, we kind of contract with customers through either the UK or the US entity. Having kind of it does help. Like sometimes in Europe, it's easier to contract with someone through a UK entity because even though it's not the EU anymore, they're more familiar kind of being in Europe. And then the same thing goes for the US.
Got a question for Jonas. What can we say to investors and others to combat the biases of making safe investments that VCs and others typically cite as a reason not to invest in Africa, but also additionally into other international zones, but mainly with your focus and expertise on Pan-African companies? How do we make those investments safer, so to speak?
Yeah, I mean, that's a great question. And that's something that I get asked a lot, especially when I say that my focus is investing in African startups. I think one of the things that is, straightforward, and I think Chris just mentioned it, one of the requirements that we do ask is for our companies to set up entities in the US, especially if you're going to be getting US investors. So setting up like a C Corp Delaware company. That way, like our contracts are clean. We know exactly, in case of an exit, it is easy to know, what the valuation will look like, what acquisition, whether it be acquisition or IPO is going to look like. And a lot of the times these companies set up, local entities as well, but more as subsidiaries instead of the main, because, for investment purpose, we always ask them to set up US entities. And even from a fund perspective, even though, again, I'm focusing on investing on the African market, everything is going to be set up in the US, just because those are the kind of contracts that most investors, either in the US or even internationally, are familiar with.
Question for Chris, question for Aaron. What does Grassroots think about private labeling? And then also for everyone that wants a discount on some nice, healthy superfood snacks. I know you wanted to share that as well, Aaron, but would love to chat about your thoughts on private labeling.
Yeah, it's a good question on private labeling. I think it's we're definitely looking into that as an option. The way I and our company views Saatchi Enchi overall is that we want people to be aware as much as possible of Saatchi Enchi and its nutritional benefits and its allergy friendly nature. So we're definitely considering private label products for other companies. As an example is like Costco has the Kirkland label. Trader Joe's has their own labels. So it's all about, for us, it's we just want more people to be aware of Saatchi Enchi and learn how to pronounce it and all, everything that comes with that. So,
well, considering that, the food product and value chain is about $1.5 trillion. Do you see Grassroots as being one of the primary suppliers of Saatchi Enchi seeds as well, and then being like the actual foundation for like a large segment of the food value chain?
Yeah, we do. I mean, what we're trying to do is actually get closer and closer to being a pretty vertically integrated company. And we're, the closer we can get to the farming specifically, the better for us. And I like, more direct relationships with farmers and where it's coming from, and even diversifying. We're having conversations with some farmers in Colombia as well, because Saatchi Enchi has this ability to provide a value add crop that's also legal, and in a lot of situations, the alternative for farmers in different developing countries is illegal crops, and that's given sources of income, that's the only other choice. And so, to answer your question, that we absolutely want to be more vertically integrated and ultimately be the source of Saatchi Enchi as it grows. And so, yeah, I want to be a distributor to several other companies who want to utilize it. So I know you'd asked about that promo code, Damien. People can use Austin as a promo code on our website if they want to get 20% off. So thanks.
And where in Austin can some of our audience members find Grassroots foods and snacks?
Yeah. So that in Texas in general, it would be Sprouts farmers markets, and then we're in some of the Whole Foods, not all of them, but some of the Whole Foods there as well.
Okay, cool. And Chris, I know, we spoke a little bit about, you're the go-to in terms of operations in multiple countries and setting up entities and all that. But like, what made you move from being in private equity to now like being on the founder side?
Sure. Yeah, I think my experience in private equity was a great foundation for kind of understanding different types of business models, and was very kind of it was just a great way to kind of get into the bottom floor of like different business models, how things are built, understanding financials, understanding drivers and levers, understanding what investors are underwriting and what they're expecting to happen to get their certain return, financial markets and everything. And then I think ultimately I got to the point where I looked at so many companies, wide array of them, and was underwriting what hope would happen to get the return, and decided I wanted to be the person like within the company helping drive that return, and kind of that tangible impact in growing something. So that's what kind of led me to make the switch over into kind of the operating side from the investing side.
Very cool. And another question for you, Chris. After Brexit, if a company wanted to sell to Western European countries, Is it better to set up an entity outside the UK? And what country is your first choice outside the UK?
Yeah, it's a good question. So I think right now, the way it stands, and I'm kind of actually sorting through some of this right now, there is a lot of favorable kind of agreements between the UK and a lot of these countries. So like for one thing, in particular, like selling into Europe, you have to deal with that. So it's like a type of tax that goes on pretty much every sort of transaction. And there's it's something called a small shop or stop, something small stop or one-stop shop, where you can register as a UK company in Ireland, and then you can sell to all the EU. And so if you do have a UK entity, it's probably fine to continue on. It's probably reasonable. And if you don't have a UK entity and are looking to maybe set up an entity to sell into there, I think Ireland is one that people have definitely looked at, from kind of being able to incorporate pretty easily and then sell seamlessly across the EU.
Cool. We got about a minute left. Is there anything that anyone on the panel wants to share that we may have left out?
Damien, I had one last thing that I was thinking of as a pro tip question was asked. One thing, if you are setting up businesses with, with partners or in multiple jurisdictions and geographies, just know what everybody's core competencies are and where they can take over operations more efficiently. So like my example is, I would have thought going in that using a big US based logistics provider that also has people in Bangkok, for example, in Thailand, would be a great option for setting up shipping. In fact, utilizing our supplier and Chan's team to do that and their connections locally in Bangkok was a much better route. And that's what we've been doing now, especially as supply chain has been disrupted. So it's just something to consider, I think, as you're thinking through some of these international business decisions.
Very cool. And then if we can get this last question in, one of the audience members wants to know, how are female investors received in Africa, Janis?
Oh, well, that's a great question. I think there's still a lot of work that needs to be done. But I think, one of the stats that I saw the other day is like over 60% of females on the continent are entrepreneurs. So there's definitely a lot of work that needs to be done for people to like accept females as entrepreneurs and investors. But I think there's still a lot of work that needs to be done, but I think we're getting there. There's still very few investors that I know of. Right now, I probably know of like 5 off of the top of my mind. Most of the investors that are investing from a VC perspective are still males. But I think more and more of us are standing up and saying, hey, we also want to become investors. And it's widely accepted, but there's a lot of education, given the way a lot of Africans still view women as, household wives. But we're getting there.
Okay, I think that's our time. And if there are any more questions, feel free to just throw them up in through networking or through like a side chat as well. I want to thank everyone for joining us today, and I want to thank all of my panelists, Aaron, Janis, and Chris. Thank you so much.
Thank you.
Thanks, everyone.
Thanks, everyone.
What a great panel to close us out. And Damien did a fantastic job. I've always liked Jonas. I think that was just a great panel. It was a really interesting discussion. Obviously, the center of gravity for technology and investment is in San Francisco, but it's clearly moving here to Austin and across the United States and across the world. So hearing those perspectives has been fantastic. Well, I'd like to thank everybody for joining us this whole week and this particular panel and this particular session. Still think there's time to think about coming to Olive and June today at 5 for the legal and IP happy hour that's sponsored by Carta. Phenomenal job for everybody. I cannot tell you how honored I am to be a part of this and even a small way of hosting today. Thank you all very much. Welcome to Austin. For those that are new, this is exactly the kind of thing that we do all the time. Austin is a very warm and open place for business and startups and activity and investments. And I'm just happy to be a part of it. So thank you all. And thank you very much for coming. And we'll see you soon. Thanks.